Yes. This
I
will
love
be
it.
forever memorialized on YouTube, except I think we can change the name, right?
Hey, can I turn my video on yet?
I don't know, Kenny.
Well, it won't let me. It says the host won't let you turn your video on.
All right, we are live on YouTube. Welcome to all of our YouTube friends. I've got the actually we probably have an endless loop here right now. Let me get this off the screen that we're sharing. All right, and I need to make it so Chris can join us. Hold on a second. We're so glad you guys are here. We're going to try something new. We're going to go live a little bit more frequently on YouTube and just bring you guys into a conversation. Let me see. I'm trying to get, this is all new to us. We're here in Zoom, but then we're also on YouTube. More, I don't know if you can turn on your video or not. Make co-hosts. See if you can see if that works, Chris. Does that fix it?
Let's find out.
There you are.
Looks like it.
Yeah.
Excellent.
All right. So everybody probably turned it off because it was a little clunky to get started, but nonetheless, here we are. We are going to be hanging out for the next little bit. There's my sweet wife's birthday mix for me. We were talking about that in group coaching, and you guys get to participate in that too. I'm looking for my stock chart. Where did it go? There we go. Back over here, I guess. Sorry for the clunky intro, guys. We're new to the YouTube world. This is what we want to do. We want to get together. We're going to spend 45 minutes to an hour or so and talk stock marketing things. We sort of have an agenda as far as things that we can talk about, but we're also very happy to answer questions, current events questions, technical analysis questions, you're learning, whatever you guys want to talk about. We're sort of designing what this show is going to look like as we go forward, but we figured we just need to start. And we want you guys to help us design the show. Let us know what you're interested in talking about, and we will be sure to include that in the session. So first of all, I want to bring up the obvious, the elephant in the room here. Chris and I were talking about this earlier today, really all week. And that's this whole issue with Russia invading Ukraine and the market not really having a clue, or at least not having a care, I guess, about what's going on. Here's where, all the invasion talk was happening. The S&P gaps down. The Dow, I think, was down 800 points that day. I don't know what the S&P gap down low 410. This is math in my head. So we gapped down a solid 10 to 11 points on the S&P, 100 points on the Dow. And then we closed up strongly into the previous day's candle right after the invasion. What the heck, Chris? Why does that happen? Do you have any thoughts on that?
Well, so we were talking a little bit before this as well. And I think my main thought around this is just that the market really hates uncertainty, right? Like if we go back to 2020, for example, if you can pull that up on the chart there, I think a lot of the reason why it dropped so much so quickly is not necessarily just that COVID was bad, right? Like there's lots of bad things that happen in the market, but this is primarily driven by uncertainty, and the market hates uncertainty more than it hates bad things happening, right? So the problem with COVID was we didn't know what it meant at first, right? Like you had that first gap there right before March at the end of February when Apple missed their earnings. And that was kind of a surprise to me because, I thought with all the news coming out of Wuhan at the time, I thought we kind of knew that since Apple had a lot of production there, that they were probably going to miss their Q1 earnings number. And then the announcement came out and it just dropped like a rock. And I thought that was very surprising. So after that announcement was made, then things just kind of started dropping left and right. And we basically just kind of kept going down because it just became, one thing after another. It wasn't just, okay, well, Apple missed their earnings. Who else is going to miss their earnings? Like, what does this mean? But it also became, supply chain issues. And we didn't know when things were going to get back to normal. And then you've got mask mandates coming in and all of that. And, there's just no telling what the world was going to look like in even a few weeks, much less, a year from then. And then as things kind of got a little bit more clear and we got to see, what was going to happen, what the new paradigm was going to be moving forward, that's when you start to get a little bit of a bounce, like the market starts to find its feet, because they basically figure out, okay, well, here's what we need to do, right? We need to buy Zoom. We need to rotate into work from home stocks. We need to rotate out of commercial real estate and that sort of thing, right? But like when the market doesn't know, when traders and investors don't know what's happening and don't know what is likely to happen, then you just go into total risk off mode, right? We're just going to dump equities. We're going to buy bonds, like whatever the case may be. We're just going to completely basically cut down our portfolios, right? We're going to either trade out of things or we're going to reduce our position in things, and we're not going to keep taking new trades, right? So it's basically just a whole slew of selling and no buying. So the whole market drops. The difference between that and what we're seeing now in Russia is we pretty much have a good idea of what is likely to happen in the Russia conflict, right? Like we know what it means for Russia to invade Ukraine. We don't know exactly what's going to happen with the conflict, but there's pretty clear outcomes with like whatever happens, right? One of the things I wanted to bring up too is I mentioned this at the start of group coaching an hour ago, but I don't think you were in there yet. Was I downloaded the data into some spreadsheets about how much oil the U.S. imports on a monthly basis. And this is updated through the end of 2021, so December 2021. I don't have numbers for 2022 yet because the government hasn't posted them yet. And then how much of that comes from Russia. So I don't know if I can hijack the screen share from you, but I'd like to for just a minute here. Not even a minute. Let me pull up that page. Sorry, 1 second.
While he's pulling up that page, I think it brings up such a great point that you cannot correlate what's happening in the news with how the stock market is going to react. The stock market always has the advantage of the insider information, so as you're watching these reports come out on Fox or CNN or whatever news media outlet you enjoy watching the most, you'd think, wow, like the market should be responding very negatively to this. This is a terrible thing that's going on. Yet all the while it's kind of marching higher from that bottom that we hit when we gapped open right after the invasion. And to some extent, my thinking is almost reversed. Like I get a cue on how seriously to take the media based on what the stock market's doing. And I really don't consume a lot of news media, but every now and then, it's addictive if you take a look at it. So like I started to realize COVID was a big deal when the market sold off and continued selling off. And I realized, wow, Wall Street is really preparing for some long-term effects. That's when I knew the 2 weeks to flatten the curve was bogus. You could have seen that a mile away looking at the stock market, because the stock market knew internally that this was not going away. And, conversely, when you look at Ukraine, and I'm not making light of this at all, I know thousands of people are dying over there. This is bad, very bad. The humanitarian crisis needs to be addressed. And right now, the stock market doesn't seem to be too worried about it. So we need to keep everything in perspective. Go ahead, Chris.
What is interesting too, just on that note, as far as like, using kind of the market as sort of a leading indicator to figure out, what you should and shouldn't be worried about, as even kind of a leading indicator to the market, then look at what happened to the bond market shortly, like even before equities turned over, bonds turned over even earlier. So I don't really want to turn this into a whole bond market discussion, and I'm not an expert on bonds by any means, but if you have the chance, just look into that in your own time, you should. It's very interesting. Bonds tend to precede equities as far as like turnovers happen. Stuff happens sooner in the bond market than it does in the equity markets. But what I wanted to show here, this is the oil data here. So for those of you that are kind of, worrying about, the oil situation in the U.S., if Russia decides not to export oil to the U.S. anymore, how bad is that actually going to hurt? Well, here's the actual number. So blue is the total oil that we import in the U.S. and then orange is how much is imported from Russia. This is monthly data, and this comes straight from EIA.gov, which is the U.S. Energy Information Administrative. So you can just download the XLS file right here. This is all I did, just put them together on a spreadsheet. And so you can see exactly how much Russia contributes to our oil. Now, our overall oil imports have been decreasing since about the mid 2000s here, and the amount that comes from Russia has been increasing. But that being said, still, if we look at the latest numbers here, we're at like, let me go down to the bottom. We can actually get a real calculation here. Divide this by the other. So the latest data, we get 6% of our oil from Russia, right? So is that something that I'm going to freak out about and, drastically worry about the price of gas going up? Not that much. It's, we get 6% of our oil from Russia. So I think it's something to like, it's something that makes good headlines. But I think it's good to actually look at the data and understand what the reality of the situation is, and not just what people are trying to sell you on headlines for, right? Because that's a totally different business model.
It's so interesting because, if Russia turned off the freaking pump, we'd lose 6%. But I don't know where you live. Chris is down in Miami. I'm in Nashville. Gas prices have gone up way over 20-30% in some locations, just skyrocketing. And that does make, so, somebody asked in one of our group coaching calls, even a couple of weeks ago, like, well, if there's all this turmoil around oil, why is the value of ExxonMobil and some of these energy sectors going up? And that may be the answer there. They're just playing on the fears and the headlines, and they're able to drive the price up higher, even though their net cost is not really changing all that much.
Yeah, you have kind of a similar dynamic in futures contracts that you do with options, with like implied volatility and all that sort of thing. Like if you look at the contango or backwardation of the futures curve, you can get kind of a similar dynamic.
Say that word
exactly
again.
The same.
The what?
What's that?
Say that again. The contango what?
So if you look at a futures curve, the shape of the curve is generally it's either in what's called contango, which is where it's generally going up over time, or it's in backwardation, where it's generally going down over time. And the generally going up over time, the contango situation, that's the normal, what is normally the case for futures. And so if essentially what I'm trying to get at is that, like, if the futures market is expecting a lot of volatility to increase in the future and the prices are uncertain, well, prices are going to go up, right? And of course, there's supply and demand and all of that as well. But that's one factor that you get in there, kind of just like how you get implied volatility in the options market, right? Is going to drive up the prices of options across the board. I'm going to stop sharing my screen. You can share stuff. If you want to pull up the oil price, that'd be cool too. Take a look at that.
Yeah. Let me get back here to Zoom. Welcome to all of our YouTube friends. Glad you guys are here. See several of you guys watching. If you like this, let us know. Type something in the chat pane in YouTube, or I don't know. What do you do on YouTube? Hit like and subscribe, I guess.
Yeah, liking the video helps a ton, especially with the algorithm. If you like it, it's going to show it to more people who will also probably like it, and it's going to help us out a lot. And it also lets YouTube know to show you more content like this. So liking and subscribing is always the best reward on YouTube. If you like what you're watching, that's the best thing you can do, is like the video and subscribe to the channel for more of it.
Yeah. So what do you use? I don't trade futures. So is it just ticker symbol oil? Like, is there an ETF that tracks oil?
I'm sure there is. I used to know the futures tickers too, and I don't. You can look at something like USO and UCO, I think, are the leveraged oil ETFs.
Yeah.
I guess USO is not leveraged.
USO and oil look to be trending the same. For those that don't know what a ETF is, stands for exchange traded fund. We've been talking about this in the foundations course. Actually, just Tuesday, we talked about it on foundations. And it's a one-to-one corollary. Some of them are leveraged, but a great way to think about this is like the Dow Jones Industrial Average. There's 30 stocks in there. If you were to own each of those stocks in proportion to their leverage in the index, then you would essentially have created your own basket called Dow Jones Industrial Average. Well, people actually do that, and it's called an exchange traded fund. And so you can come here to ticker symbol like DIA, which is the only ETF that trades with the Dow. And if we overlay the Dow on top of this, it should be nearly identical. Where'd my little compare thing go? Normally there's the plus sign. Oh, there it is. Moved over here. DJIA, Dow Jones Industrial Average. That's behaving strangely. Hold on, let me reload. TradingView seems to not be functioning the way that I expect. Anyway, point being, I don't think we need to belabor that point. So oil will track the futures market with oil prices. USO is another one, and they're managed by different companies. So you can look up online with a quick search which company is managing the ETF. Both of these are great ETFs. So again, the price of oil just skyrocketing, but it was already kind of in that trend before we even started talking about Russia that much. Just in general, the price of oil is going up. So, was it unforeseen or was it forecasted? It's interesting when you start looking at the market.
Yeah, one of the things I want to add too, people wondering like, well, why are, oil companies doing well right now? Well, if you look at the price of oil and then consider what side of the equation these companies are on, right? If you're a company that sells oil, like you extract oil out of the ground and you sell it, well, if the price of the thing that you sell has gone up a lot, then you're going to be generating a lot more revenue, right? Because your price per unit has basically gone from, $60 per share a month ago, or per whatever. I don't know what this is measured in, but up to, $76 today or 75, something like that, right? So if the thing that you sells for more, then you're going to make more money. And if the cost of extracting that, right, the cost of producing that thing hasn't gone up, which, maybe it has a little bit, but definitely the price of oil has gone up a lot, and it hasn't gotten any more difficult for them to extract it out of the ground, legal issues aside, where, if there's territorial disputes around that area of the world. But just in general, right, like if something you sells for more, then you're going to make more money. So those companies have become more valuable just because they're bringing in more money than they would have before. So it just depends on where in the supply chain you sit.
I want to turn the page here and move on beyond Russia and Ukraine. It goes without saying, but we will say it. Our heart is with the Ukrainian people, and we want them all to be alive and in control of their country. But I want to change the conversation to the S&P, and I think this is not something we actually talked about ahead of time, Chris. So I'll just throw this at you in real time here. We're in an interesting moment in the market. This is something I've been watching, and if you found it's a little tricky or difficult to trade the last couple of weeks, this could be what you're experiencing subconsciously or consciously. Everywhere you look in the market, we've got these chart patterns. This is a head and shoulders pattern. I mean, there's so many stocks that are out of resistance right now. And at the same time, the question that's in my mind is, has this retracement completed? This size of a head and shoulders pattern on the overall market, in my experience, really should require a little bit more downward pressure. But at the same time, we've got some massive support zones in areas where price has memory. That's a key thing we say a lot. I'm just curious if you've got any thoughts on that, and how you're looking at the market, bullish versus bearish. Is there anything that you can do if you're uncertain of the direction to help manage risk in your overall portfolio?
Yeah. One of the things that I talk about a lot with my students and just people in general at TSU is making sure that you don't have a very strong bias one way or the other, right? Like we don't know when the market is going to turn over, if the market is going to turn over. Like if we're in a bull run, right, like throughout 2021, we don't know when that's going to end. There was that big drop in September. Maybe that is statistically likely or whatever. But the point is that we can do our analysis, but ultimately, right, trend lines get broken, and levels, support or resistance levels that held before might not hold this time. And so what I always tell people is just don't be 100% bullish or 100% bearish, right? Have a mix of long trades and short trades in your portfolio, have calls and puts, right? Don't just have one or the other, because then you're very exposed to the opposite thing happening, right? So if you had a portfolio that was just all long positions, right? Maybe you just buy the index or something, or whatever, you just buy companies that you like, well, then you run the risk of the entire market dropping against you. And so we had a training last week actually that was all about how do you do this, right? Like how do you get both bullish and bearish positions? Why is that important? And how do you kind of match those together? And that's really what goes a very long way to kind of smoothing out that equity curve and making sure that things don't get too rocky in your portfolio, right? Because you don't want to take the market risk. If the market is down 10% year to date, which it almost is, you don't want to be down 10%. Ideally, you're up a little bit, or you are, hopefully flat, or at the very least, you're down a little bit and you're not down a full 10% like the market is, right? So how do you do that? Well, you have to have a mix of bullish and bearish positions, right? You can't be all one or the other. The other thing too is like just pick good stocks, right? So that was another thing we talked about a lot as well, is that like make sure that, if you're going to buy a stock, make sure it's a good bullish stock. So generally, like strong companies, meaning like fundamentally strong companies, are likely to do better when things go bad than fundamentally weak companies, right? And that was essentially what led to your Jets trade, which again goes back to what I was talking about on oil. Which side of the supply chain are you on? If you're the person selling oil, well, that's good for your business. If you're a company that consumes a lot of oil, like airliners, for example, then the price of your cost of doing business essentially goes up when the price of oil goes up, right? And big corporations hedge that sort of thing with futures contracts and all of that. Like I know that, but just in general, if the cost of doing business for you goes up, that's not good for your business, right? So necessarily, if oil is going up, well, that's going to be bad for travel, airliners, and that sort of thing. It's going to be good for companies that sell oil. And where was I going with that?
So
before I started talking about oil.
I don't know where you're going with that, but it's a great segue to talk about that Jets trade. So this trade came up about 3 weeks ago now in Power Trader, and we were sitting right about here in Jets. And I'll walk you guys through my thinking process on this. And for those that are unfamiliar, Power Trader is an opportunity over the weekends where me or Chris or Steven, we sit down and we start thinking through how we're going to approach the week of trading ahead. It's like any other business that you're running. In fact, we do this at TradeSmart as well. Like we sit down early in the week and we say, here's what we want to accomplish for the week ahead. How are we going to know if this was a good week or a bad week? And we let you come into that thinking with Power Trader. And I was actually texting Chris Burgess. There's two Chris's at TradeSmart on the early Friday or Saturday morning, I guess it was. I was doing this research and I was like, I'm not a fundamental analyst, but as we're watching these inflation rates hit 40-year highs, the corollary to that, if we're going back to 1980s, like the result was interest rates started to soar. And in fact, the Federal Reserve, if you've not been tracking it, already has said they're planning on 3 interest rate hikes in 2022. They've told us what they're going to do. Interest rates are going up. And when you start thinking about that, I was like, man, companies that are over leveraged in debt are more likely to be negatively impacted by interest rates going up, because nothing changes in what you're able to produce as a business. However, your operating expenses go up artificially as the amount that you have to service the debt for goes up as well. And so I was actually looking at, and I think this is the trade you took, Chris, with the American Airlines trade. Mm-hmm. I was looking at American Airlines, and again, I'm not a fundamental guru. That's Chris, so I'm just a poser here right now. But he and I were chatting, and I started looking at some of these graphs of total debt that a company owes, or a debt to equity ratio, or the enterprise value, which is interesting because the enterprise value factors in debt and cash into its market capitalization. So when you see that the market capitalization on American Airlines is 10 billion, but their enterprise value is actually up at 44 billion, that the enterprise value you could think of more as what it would actually cost to acquire that company. Because if I'm going to bring a company in that has 30 million in debt and it costs $10 million on top of that, or billion, I guess in this case, it's going to cost you 44 billion because you're acquiring all of that debt with them. It's like, whoa, that's a lot of debt. Again, Chris can tell you exactly how all this works. He's super smart. I'm just going from the school of common sense. Like, all right, these guys are carrying a high debt load. I don't care if that's even kind of normal in the airline industry or not. I'm just smart enough to say it looks like If interest rates are going up and the Federal Reserve has told us the interest rates are going up, that can't be good for American Airlines. And going back to foundations of trading level 1, look at this beautiful downtrend that we're already in. I mean, I know some of you guys come to classes and you think, is this really that easy? Like, this was really that easy. And it just so happened that power trader, we were sitting right there. And I'm like, son of a gun, if this thing hits resistance and starts back down again, that could be a really, really great trade. Now, remember, those of you guys, we have a lot of students in here on the Zoom call and then on YouTube. What's up, YouTube friends? You remember these pivot points are directionally agnostic. So, I mean, American Airlines could have shot through and turned into a rocket company. You know, that's an internal joke for those. It could have skyrocketed, and okay, I was wrong on my analysis, but it didn't. It hit resistance and it came straight back down. And put options on this were super cheap. We got into them, and this was actually, we made over 100% return on that one trade. And for those of you that are still in it, I mean, good on you guys. This is American Airlines. I didn't connect the dots here. The way we got into jets is I was thinking to myself, and I looked at all the airlines. They were the same: American, Delta. What was another one that I looked at? Not Southwest. Southwest was unique. They have a unique business model somehow. Anyway, I looked at these airlines. I thought it'd be cool if there was an ETF, going back to our ETF discussion, that kind of averaged out all these airlines. So maybe, Southwest was more bullish than American was or whatever. Turns out there is. And it's called Jets, of all things. And so I actually entered the Jets trade. Chris felt more comfortable with the American Airlines trade. We both made a lot of money on those trades. So that's where you can start blending some of this fundamental thinking with your technical analysis. And I want to go back and highlight one more point, and then I'll shut up. Chris's point that companies that are fundamentally sound during these uncertain markets are going to tend to perform better than companies that are just hype, a la Tesla. Tesla's a lot of hype, not so much fundamentals right now. Go ahead, Chris, I'll let you share.
Yeah, no, I mean, just carrying on from that thought and kind of also, back to what I was talking about before, like go long good companies and go short, not even necessarily bad companies, right? Like, it's not necessarily the case that American Airlines is a bad company. It's just that it's in a pretty tough position right now, or the airlines in general are in a pretty tough position where, they have a lot of debt and interest rates are rising, and they consume a lot of fuel when oil costs are going up.
Yeah,
right?
that was
that's a tough
bonus
position to be in.
I didn't see the price of fuel skyrocketing, but that definitely helped out our Jets trade here.
Yeah, and so like if you have companies like that, right, where you're just looking at what is not going to do well in this type of environment. And this is the same thing like how you made money in 2020, besides just buy anything, because pretty much everything went up in 2020. But a lot of the thinking was, who benefits from this and who does this hurt? And that's always the question you should ask whenever any environment that you're in, especially when there's some paradigm shifts, right? Like 2020 is the big one that we all remember in recent memory here. Like, the whole work from home thing. Well, who does that help? Who does that hurt? Right. And so that was where you wanted to look for longs and where you wanted to look for shorts. And if you're doing the same thing today, it's kind of the same thing, right? You're asking the same question. You're getting different answers because we're in a different environment now, but you can still find stocks that are going down in this environment, like Jets, and you can find stocks that are absolutely skyrocketing. Like if you pull up CLF, Cleveland Cliffs, or John Deere, DE, both of those have been going absolutely nuts for the last week or so. And they're both sitting in the same market environment. So who's winning and who's losing, right? There's always going to be winners and losers. And that's just kind of our job as traders, is to go long the winners and to go short the losers. And if you have a combination of both longs and shorts, then you end up not really worrying about what the market overall does. And that's kind of the point that we're trying to get people to, I think.
Yeah. And, Chris taught me this probably 2 or 3 years ago, and it's so obvious yet so smart. I just had never thought of it this way. But look for stocks that are going up and look for stocks that are going down, and you buy long on the stocks that are going up and you sell short on the stocks that are going down. So we're not asking you to speculate a change in direction. We're just saying find the ones that are already going that direction and buy into them. It's not quite that simple, but it's also not that much more difficult. And so then there's a few permutations from this, right? The first is the best case scenario, where the stocks that are long go up and the stocks that are short go down, and you make a lot of money. There's another opportunity, which is, kind of an interesting scenario. That looks like a sad face. Here, we'll make it a little bit happier. Maybe the stock that's going up really went up, and the stocks that were going down also went up a little bit because some really good news came out in the market or whatever. The inverse of this is true as well. Maybe the stocks that went down really went down, and then your bullish stocks went down a little bit. So that's what Chris was saying. Hopefully you're at least neutral or even slightly positive, where the market's down 10% on the year. And then, of course, your worst case scenario is that the stocks that were supposed to go up went down, and the stocks that were supposed to go down go up. And that's your worst case scenario. But you take what's the word? Well, there's only two options. Binary. You take a binary option and you expand your potential for success. So the worst case scenario is only a third of the options, and it's actually 25%. If you factor that this middle option is really two. It's a great
and the better your analysis is, the more you decrease the chance of that happening, right?
Yeah. Yeah, and you have a whole system, don't you, for going through and figuring out what these spreads are, not to be confused with option spreads, just raw company, the stock spreads themselves.
Mm-hmm. Yeah, stuff that I picked up from professional Wall Street traders back in the day. Take a look at John Deere too, ticker DE. So this is one that I talked about on Power Trader this past weekend. And it's one of those stocks where it just goes sideways. It's been going sideways for a year, basically. And so I've had a great time trading this over the last year or so, because it just keeps going back and forth between these two levels, right? And so when it came down and basically hit support again, and started bouncing off of that, when I was looking at Power Trader, and I went, well, we're heading back up again. At least that's what it looks like. So just, find some of those, and then find some that are doing the opposite, in the opposite direction. Go along the ones that look like this, go short the ones that are the mirror inverse of this, and you're pretty much good to go. You don't have to overcomplicate it,
Man, that's so true. I say all the time, take the easy trades. The market does not give you bonus points for trading some wackadoo penny stock herky-jerky thing. Take the easy trades. And it's funny you bring up John Deere. I've been using that, some of my examples in the foundations class as well, just as easy sideways stocks to trade. Mm-hmm. And I'm curious what the Bollinger Bands look like on this. Not the Bollinger Bands are great. Where's my Bollinger Bands? Well, obviously the left. Well, dang it. I guess this is it. Yeah, Bollinger Bands aren't great in a sideways market necessarily. Yeah, they're just not great in a sideways market. What is great on a stock like this is stochastic. Y'all could go and do an exercise and just find out during this sideways trend how many times stochastic comes below 20 and then it goes up, or gets above 80, starts crossing down and goes down. And you could tighten these levels a little bit more if you wanted to as well. But I would say that's a very key pivot point to look at that we're coming into right now.
Yep. So there's another opportunity here. I mean, if it doesn't break above, 390, 400-ish, then I'm probably going to sell a call spread to the upside, right? And that's just what I do on John Deere, because it just keeps going down and up and down and up. So it's been a pretty relatively easy one to trade.
Yeah.
It's nice to see Power Trader trades work out,
Oh, it's always great.
Especially when they're just beautiful like that.
I tell you what, anybody that's on this call, if you want to become a great trader, just tell a few thousand people what you're planning on doing, and you'll make sure to double check your homework and analysis and follow your own rules. And that, joking aside, I was a good trader before we launched Power Trader back in 2009, and that's what made me a really great trader, because you have accountability. So I encourage everybody to have a trading partner. It's one of my trading rules. Make sure somebody always knows about a trade that I'm taking. Easy for me, because obviously you guys are always watching us, but That's a good rule of thumb. Always make sure somebody knows about a trade you're taking. If you need a trading partner, let us know. We'll be glad to connect some people. Cool. We've got several on YouTube that are watching us. I probably saw the title, The Honky Stonks Show. So I thought that was a creative idea, and I've been sharing it with several people, and unanimously everybody hates it. But show me a little love if you think honky stonks, because of course, our home base is in Nashville. It's where I live. That's where the majority of our TSU team lives. Chris lives in Miami because he's cool. We're not that cool. But in Nashville, we have all these honky tonk bars that are downtown Nashville. It's like what we're known for. And of course, stonks on Reddit, that's the whole meme thing. And I thought honky stonks was just perfect. In fact, honkystonks.show is available as a URL, but this may be the one and only time that you see the honky stonks nomenclature in the title. I couldn't resist myself.
See, I agree with David here, where it's kind of like being from LA, right? Like if you're from LA, you think it's great, but everyone else is like,
yeah. like seriously, you should leave LA. Mm-hmm. John wrote in the Zoom chat, said honk is also an insult, and David said it has a bad representation nationally, reputation nationally. All right. Honky Stonks Show was a great idea until it wasn't. But what should we name it?
Yeah, we do need a good name, though.
Yeah, I mean, we can only go so long without it being named. Our goal is to do this every week. I can't guarantee it's going to stay this same time and same day of the week. We may move it around a little bit to see what schedule jives with viewership and also with our responsibilities we have. But I think we'd like to keep it mid-market so we can talk about things going on in the market. And all things stock marketing, whatever you guys want to talk about, we'll talk about it. We're going to try to keep it light. We're going to try to keep it entertaining, but we're also going to try to keep it educational as well.
Yeah.
Yeah.
David is reminding me too, you need to put earnings back on your chart. I was thinking about that the other day too, when we were looking at something where it had I think it was Rocket. We were just looking at where it just started bouncing after earnings, but can't see the earnings on your chart.
Yeah, I take them off for screenshots in classes so it doesn't clutter it up, but I'll put them all back on here. There you go. Dividends are like the unsung hero at TSU. I feel like we don't major on dividends as much, but I'm telling you, I think John Deere has good. Look at that. That's $1 dividend. I know it's a $400 stock, so not quite as great, but not some dividends are 5, 6, 7% a year. And it's just more cash in your jeans. And the way I look at dividends when I'm trading is risk management. So if I'm going into a trade into X dividends, obviously you want to be long, not short. So it disqualifies any short trades on that stock because I don't want to have to pay the dividend. And it can either give you a little extra buffer on your stop. You can add that dividend buffer in, or you can just plan on it improving your risk management. You have a little bit less than an R that you're actually risking because you're going to be bringing cash into your account for dividends. So yeah, when all else fails, I love looking at stocks that are coming into X dividend, which is the term that you guys want to search for when looking for that X dividend date, is the date you need to own the share to get paid your dividend. And you just have to own it on that date. That's it. You don't have to own it for a month or a week or anything, just literally on the date. ExxonMobil's got a good dividend. That sounds about right. So they're at, so almost the same dividend, 88 cents, 20 cents less, but it's an $80 stock right now. So I feel like TradingView literally updated something while we were on this call because they never used to have the ticker symbol logo there. So
yeah, it definitely looks different than usual.
Yeah, they moved it around literally. Let's see what they said. What's new? I don't know, they didn't say, but yeah, the plus sign used to be over here and they moved it. Come on, TradingView, what are you doing to me? I'm getting old. I can't deal with change. All right, I'm just checking our chat from YouTube and checking the chat from Zoom. Your YouTube audience is much quieter, but that's okay.
I know we got crickets over there. Come on, guys.
What else? I don't have anything else on my agenda to talk about necessarily. I'm happy to look at a stock if somebody wants to do that. This is for you guys, or we can wrap it up and say the first show was a success. We'll see you guys back here next week. We can't talk about everything we know in the first show because then we'll have to go learn more stuff. Take a look at CLF. That's Chris. He was looking.
I always like looking at CLF.
All right, I'm stopping my share, and you're up to bat.
Oh, I'm gonna share it. All right, let's see. Ooh, sorry. Let me share my screen first before I start talking about something you guys can't see. Here we go. So this was a trade that I was just sharing in the Slack channel. This was bearish earlier, and now it's turned bullish, at least for the day. I mean, sitting basically right at that resistance, but we'll see. This is a one that I was looking to go short on, but we'll see what happens. All right, let's see. What are we pulling up? CLF here.
Oh, what trade was that?
What's that?
I couldn't see the ticker symbol. It was under your.
Oh yeah, I've got
post-it
my
note there.
stickies in the way here. This is Coupang CPNG.
Coupang. Sounds like
They're another one that came up on unusual options activity, so I've been keeping an eye on them.
That's so cool. I'm excited to share that with you guys when we get the whole system nailed down.
Oh yeah. So what do you want to look at here?
She wanted to look at CLF.
Right. Yes. But what about it?
Well, to me, that looks like it's about to run into a major pivot point and is exceptionally overextended.
Oh yeah. Yeah, this stock is it has shot up quite far. I would not be jumping on now. Let's put it that way.
All the retail traders are trying to grab onto this train, and it left the building about 5 days ago.
Yeah, we're basically dipping into, is it dipping if you're going up? I don't know. We're running into overbought territory here. I would say we're basically already there, really. I mean, come on. I don't necessarily think this one has a lot more room to run. But then again, you know, I could be wrong. Maybe this thing goes to $30 a share. It's either way. I mean, it's a great company. I've been trading it for, I mean, 2021 at least. I think, yeah, I don't think I knew about this company in 2020, but it's been bullish for most of the time I've traded it. And then the end of 2021, it started getting a little more sideways, but it's been on my radar for a while. And after we had this big drop here, I started accumulating some more of it. And so it's been a couple good runs on this stock already. I'm a big fan of it.
Interesting. Yeah, this could actually be a company that I would just put in a notebook on a short list because it is definitely running into a resistance point there. It's definitely overbought. And I think that, like, so you have to put your mind where the traders are. So some people got in about $18 and this thing's up to 25. You know, so they've made, what is that, 50% return in 6 sessions? Did I do that math right? Let me pull up the little measurer here. So if you bought in at the low of that first major candle, 30%. No, is that right? Hold on. I may have drawn the wrong way. Yeah, 44%. There you go. Turns out if you draw from top to bottom, you get a inaccurate measurement. So I'm sitting here thinking, you know, if you were in that trade and we're coming up to a major pivot point and you've got a 42% return on that trade, and that's just if you bought in there, not a month earlier, you know, are you going to be buying more or selling? I would not be surprised to see selling pressure start showing up here on CLF. And you know, you've got declining MACD going on. Momentum is falling out of this thing. I don't know. Could be an interesting one to watch. I wouldn't try to predict it. I mean, you got to be pretty gutsy to go short in the face of today's candle, but I would keep an eye on it. That's my opinion. So, you may have a different one, Chris.
I didn't trade out of this, but I capped my trade yesterday because of that candle. Like, just looking at this series of candles in a row, this looked like momentum was basically dying out. And, like, you know, lesson learned, I should have waited, but I didn't want to wait for, a big red candle before I capped this trade. Let me see if I can like show this without doxing myself. Hold on a second.
I can
okay, we're
give
good.
y'all Chris's phone number if you guys want.
Yeah, thanks. So let me pull this up on Thinkorswim here. Yeah, so this is my, oh, disappeared on me. Come back. All right. So this is my CLF trade. So I had just a couple of calls here, right? Paid $2.50 for those, and whatever they're worth now, like $4 a piece, right? So, or paid $1.22 for those, and they're worth like $4 a piece now. Looking at that candle yesterday,
I give you my phone number. Call a friend. I said, why don't you give me those trades? Call a friend.
I've just been giving you the unusual options ones, which we've got some today. Actually, some people are 20,000 contracts traded on the May 29 strike calls on CLF. That seems a little crazy to me. We can look into that a little later, but yeah. So I capped this too early right now in hindsight, being 2020. So I ended up selling the 23 strike calls because that's what we were closer to yesterday, and then buying the 24. So I turned this into a butterfly here, which removes all of my risk from this trade, because if you guys don't know options, don't worry about this. This just get the broad picture here, right? Where if the stock went back down to $20, I'm out what I paid for my options, which is basically a couple $100 on this, right? Not a big trade, but it's a 1R risk for this account here. So that is what would happen if the stock went back down, is I could lose money, right? But by making an adjustment here with options, now if the stock goes back down, worst case scenario, I make $16, right? That's this, I'm looking right here in this blue text here where it says 16, right? So worst case scenario, I make 16, but with the stock where it is up now, if it closed at 23, I'd make whatever, 600 or something. And if it went up here above 24, which is where it is now, I'll be up about 400-ish. And that's just profit. That's not including that is including the cost of the trade. But I did cap it too soon, right? If I had uncapped it, I'd be at higher profits today, but that is what it is. So can't cry over making a profit. It's just something interesting making a profit. So you never know, like just because it looks like it's starting to tip over, and then bam, it just has another day like that, Oh well, is what it is.
Say, I'm going to forgive you for having all of your candlesticks solid. I can't. To me, everything looks bearish on that chart, but that's just because I'm old and learned to trade with black and white.
Yeah, you're crazy.
I might be. That's probably certifiably true.
David says, isn't that when you should scale out of a trade? That is kind of my way of scaling out of a trade, but it still maintains upside. If the stock, like if the stock were to just kind of fizzle around here between 23, 24, I'd actually make more money, which is why I do it that way. But yeah, it's kind of like scaling out of a trade. I've essentially locked in my profit at this point, and there's a little bit more upside potential. Now, if it shoots up a lot more, then I'm evened out, right? Like I don't make more money the higher the stock goes here. That's why that line is just flat here. So my profit line here just flattens out above 24. And since the stock's been above 24, I'm not making any more money from it going up. So probably looking to exit this pretty soon. But there was another one that came up as well. EXC, I think. Yeah. Don't think that's one I'm familiar with here. Exelon. Well, that's pretty bullish.
Yeah. Wow.
There's another one of those, like I looked at a few of these on Power Trader though, where energy companies especially that are like basically all just sitting right near resistance. And so I'm always just like, there's like two situations where I'm hesitant to buy even when it's bullish. And one is like when the stock has just gone up a ton, right? Because, like, am I going to buy Deere right now? I mean, no, right? Like should have gotten in this trade last week or on Monday. And then the other one is something like this, where like, yeah, it's bullish, but we're like right at resistance. So I need to see something happen first before I would take this trade. But I mean, if you've been in this trade, I mean, good on you. This This looks
That
great from a
trade
bullish
is
perspective.
perfect. Do you have a stochastic indicator in your templates?
I
there?
don't. I am not a pro at stochastics. I need to do my homework and learn more about it. I can pull it
Let's
up though,
see.
and you can teach it.
There you go. Yeah, throw a stochastic on there. Other
Okay.
than the fact that it looks ugly right now.
Oh yeah.
Click on the settings for that. Let me make sure that's correct.
Yeah. Do you just want to take screen control?
Yeah, I'll just do that.
Yeah.
How do I do that? Screen share. I'm hijacking it. Boom. All right. I keep losing my charts. Here we go. What was that ticker symbol?
EXC.
Yeah, this kind of a trend is money, guys. So just do a little case study on yourself here. You know, this trend really started picking up. Well, I don't know. That's just what we're looking at. Yeah, so the COVID bottom, and then this thing has been trending ridiculously bullish. That's a pretty good picture right there. And just do a little case study on every time stochastic came down and then crossed back up through 20. I think without exception, the recent one back here, this one took a little longer to play out, but I don't even think you would have got stopped out of that, depending on what your stop placement strategy is. All these were very predictive for next moves. And if you want to add to this, you can add a Fibonacci retracement. So we would come in here, let's pull up the Fib tool. And let's say this one's a good example. I mean, I'm just telling you guys, this is gets me excited.
Yeah, look how
so all
much,
I did,
like everything just lines up perfectly there.
yeah. I mean, this thing you could just draw. What I don't. I'm losing. I'm at loss for a metaphor because this stock has me tripped up. Thank you for whoever sent this in. But notice we pulled right back to a 50% retracement, and this is like down and dirty, grossly drawn fibs. Like I didn't even spend a second looking at it. But a stock that's in a very disciplined trend like this that pulls back to a Fibonacci retracement with stochastic crossing up through 20 is money. So good. Such a great strategy. So as you're looking at this, you know, right now may not be a good time to buy into this. That's not that fib is not current events. Let's get out of here. Get rid of that. I'll bet anything. Let me get my fib back up. This lines up as well. It's just too disciplined not to. Let's come back down to here. Well, that's ironic right there. There's another one here. I don't want to get into teaching fibs because maybe we'll do that next time. We can talk about it a little bit more, but either, you know, if you measure back to this pivot point or this pivot point here, you know, beautiful Fibonacci retracement, this was the time to get into that trade and then, you know, wait for it to come back up. I do not try to trade the retracements. So you may think the inverse corollary, you know, going down through 80 is good. It's not. I don't try to trade against the trend. I only trade with the direction of stochastic crossing up through 20. So
Yeah,
there you go.
Don't try to swim against the current.
Yeah, that's $1 million comment right there. Cool, good find. Oh, we have a comment on YouTube. Legacy. Here, I think I can type in here. I'm going to experience this. Info at tradesmartu.com. There you go. Glad you're here, man. I'm curious, have you been involved with TradeSmart before, or you just found us randomly? We're new to this YouTube thing, but it seems like all the cool kids are doing it. So we just hit go live.
We want to be cool too.
I try every day. Every day I try. You're welcome, John. I'm glad that was helpful. The settings for my stochastic are 14, 3, and 3. With an 80 and 20 band on the top and bottom. There you go. K is 14, D is 3, and smoothing is 3. I love the stochastics indicator. I don't know why. Well, I discovered this, that money trade I just showed you guys, and then I've been addicted to it ever since then. Also moving up on my favorite indicators list is the MACD. I've been really enjoying this. Let's take a peek here. So yeah, I was curious if we had any divergence going on. This would have been a concern right there, but it was just negated. So you can see how MACD was falling off while we're making higher highs up here. And this is actually a good example of failed divergence. You know, price shot up, and that would have been a great entry right there, like we said before. Actually, this is weird too. Divergence right there, but that did not play out. So every stock has a personality. You need to learn the personality of the stock. That's why I always say, you know, look left. Well, that's up and left.
Yeah, something I was telling people too in group coaching the week that you were gone. And I don't think I've ever run this by you before. So I was like, John or Josh would probably have a heart attack if he if he was here. But you know, is like there are default settings for indicators and stuff, but you also have to pay attention to like what the stock is actually telling you. So I gave them the example of the RSI on eBay, right? Where yeah, if we pull up eBay and then if you pull up the RSI, what is your RSI set to? Is that
Genius
30,
mode?
30 and
That's
70?
what it's set to. 10.
Oh yeah, maybe it's the 10. Because by default, it's like 14 or something, right?
Yeah.
Or if we look at 20 or something like that.
That's why you need to take my training, Chris, because you wouldn't have the terrible default mode.
Well, see, I don't use the defaults, but that was what I was
Okay.
like telling people is that like, you know, if you just use the defaults because someone on the internet said to, or that's just what your broker gave it to you as, right? Or the platform is set to, like, you have to pay attention to like what the stock's actually telling you, right? Because like on the default RSI setting, there was never an entry point to get in long on eBay for like the last year, even though there were tons of great opportunities to get in on eBay. You just kind of had to adjust how you're looking at your indicator. So that's the thing, is that like pay attention to the stock, right? Just like what we were just looking at on the MACD as well. I think the MACD is a fantastic indicator that gives you tons of information all packaged into one thing. But you can't expect it to be exactly the same on every stock with all the same settings and everything, right? Like the stock that we were just looking at, the MACD divergence didn't mean anything, right? Like the stock didn't go down just because there was a divergence. So it's, you know, getting to know the stock that you're trading and seeing how it behaved in the past, which again, look left, price has memory and all of that. And just don't just like blindly apply indicators to what you're looking at without thinking about what is the indicator actually telling me and how does this individual stock behave.
Yeah. I'm actually a fan of trading less stocks. I don't follow my own advice necessarily. But I have a friend that all he trades is Tesla. Maybe there's like 2 other trades that he trades. And some of y'all met him. I don't want to disclose much more than that because I don't think he's very humble about what he trades. He has a large account, but it's not astronomically large. And he had a 6-figure trading day recently. He sent me a screenshot of it. I'll see if I can pull it up here. It's fun to look at. Whose screen is being shared here? Let me pause this so I don't dox myself here. Anyway, point is, all he trades is Tesla. That's it. And you get to know the stock and the community that's trading it. Here it is right here. Unpause my screen, resume share. So January 3rd was this trading day. And here's where you can see his results. So 60, 90, just under 100,000. Or I think I added it up. I thought it was 103,000 is what he actually netted that day. Super cool trading day. All he trades is Tesla. Is that true? They don't give me the ticker symbol in here, just the options. Yeah, calls. But I know all he trades is Tesla. So get familiar with the stocks that you're interested in trading. And not that it's bad hopping around. I mean, I'm going to for sure look at that. What was it? The EXC? I forgot it now. Exxon. Yeah. I'm 100% going to continue looking at this. But you can kind of begin to build a Rolodex of stocks that you're familiar with. And, you know, if you subscribe as we do to the theory of technical analysis, that it's people's sentiment that's moving the value of the stock, it's the same institutions that are trading these stocks. I mean, they may come in and out, over larger periods of time, but for the most part, it's a very similar group of people trading the stocks. So it is possible to start to pick up on the nuances and the behaviors of the people trading those stocks.
So Hans has a great question.
Yeah. Oh, yeah. We were just talking about that.
Yep.
Is there a TSU class on indicators? There could be. So right now we teach indicators in foundations, and Chris Burgess and I literally this week we're talking about a more robust multi-session class on indicators. Obviously, I use 7 indicators by default plus the Bollinger Band strategy, and then my pre-market volume is that's really a strategy setup as well. So we could teach those, but there's other great indicators out there. It could just become analysis paralysis for me, but different indicators connect with different people. So would you be interested in that, Hans? We want to create content you guys want, and if there's enough demand for it, we'd be happy to put that together. Enthusiastically, yes. Okay. There you go. Steve's in as well. Okay. Well, maybe that's the next class we need to create. I was thinking about creating a class on chart patterns, but I think that's just because I put together an introduction to chart patterns, and it was on my mind, but maybe we should do indicators first. Thanks, John. You're kind-hearted. Cool. Well, we're at about an hour here, guys, and today's actually my birthday of all things, and I know my family's got some activities planned that they want to do. So if it's cool with you, Chris, I'm okay wrapping it up here. I think it was a great first session for the Honky Stonks show.
You're killing me.
Literally, Chris was like, yeah, that's a no. We're not going. I'm having no part of that. I don't want my name attached to that. If you have an idea for a name, type it in the comment section on YouTube, or if you're in Zoom, you'll have to email it in or go find it on YouTube and type it in there. That's a better idea. Like the video, subscribe if you will. Chris, I'll let you have the last word today. So thank you guys for joining us. Blessings on your trades. We'll see you next week. Chris, take us on home, man.
Yeah, the only other thing I would say is make sure you drop Josh a happy birthday in the comments on YouTube. We'll go ahead and wrap up there. So it was a great time. I had a great time. Hopefully you guys did as well, and we'll see you next week.
Great. See you guys.